Okay, I will be. Last week we did purchase journal and sales journal. So today, before the starting of the class, I will quickly sum up the lesson, the purchase journal and the sales journal. Okay, so we are in the 10th lesson. We will be learning about purchases journal, sales journal, general journal, and some things about how IT electronics have improved the banking and financial sector, and how businesses are being supported with computer aided accounting and all that. We will be discussing about that as well. Uh, okay, so purchases journal. Purchases journal is a specialized journal. Now, let's say you are buying goods for the purpose of reselling. If you are buying goods for the purpose of for the reselling, and if you are buying them on credit basis, you are firstly recording them on the purchase journal. So purchase journal, it's a prime entry book, and once you buy one thing, you are buying goods for the reselling, and the next thing you are buying it on credit basis. So if that is the case, you will be initially recording these transactions in the purchase journal. So there are examples. We talked about these. For example, let's say if a business buys and resells automobiles, the purchase of automobiles on credit basis is recorded in purchase journal. So in terms of purchase journal, now we will be recording names from whom we bought stuff, and these people will be liabilities. Okay, and the amount that is payable is a liability to the business. And then about the source documents. So in purchase journal, we have a source document. We call it invoice. And since it is purchase journal, we will be calling it purchases invoice. Okay. So this information and purchases invoices will be recorded in the purchases journal at first. So we look at an example. For example, now this purchase journal invoice number is 120. It's been issued by Deshan Bookshop Main Street, Dehiwala. Deshan Bookshop Main Street, Dehiwala තමයි මේ බඩු ටික විකුණන්නේ. And Rashmi Bookshop Maharagama is buying it. Okay. So this is the purchase journal of the manager, Rashmi Bookshop Maharagama. Okay. Their purchase journal. Since we learned about the sales journal, okay, this is sort of like sales invoice for the Deshan Bookshop. This is purchase invoice for the Rashmi Bookshop, and this is sales invoice for the Deshan Bookshop. So what have they bought? They have bought drawing books 40 at 100 rupees, and CR books 200 CR books at 130 rupees, and exercise books 120 at 60 rupees per each. And then they have mentioned the total, and on top of that they have given a trade discount. So what is the specialty in trade discounts? We are not recording them in the our accounting books. Trade discount is not recorded in our books, accounting books. So we will be passing this net amount 33,480 to the accounts and the purchase journal. And here it's mentioned as condition 5/30 net 60. Can anyone remember what does it mean? Can anyone remember what does it mean? I mean condition 5/30 net 60. Can anyone remember what it is? 5/30 net 60 means that for settlement of this 33,480, this total amount, you have 60 days. Okay, you have 60 days. And if you settle it within 30 days, you will get a 5% discount. Okay, so on top of this 33,480, if you have to settle it within 60 days, if you settle it within 30 days, you will get a 5% on top of this. Okay. So when the condition 5/30 net 60 indicates that the purchaser should settle the credit within 60 days, and if she settles within 30 days, a 5% cash discounts will be given. Okay, the trade discount is the reduction in the listed price of the goods at the time of the purchase on credit. This trade discount is deducted in the invoice and not recorded in the accounts. This is important. Trade discount is deducted in the invoice but not recorded in accounts. Okay. Then after deducting the trade discount, the net purchases value of an invoice will be recorded in the purchase journal. අර trade discount එක අඩු වුණාට පස්සේ එන මෙන්න මේ value එක තමයි අපි purchase journal එකේ මේ 33,480 කියන එක තමයි අපි purchase journal එකේ record කරන්නේ. Okay. And this is a sample of the purchase journal. So I told you now, remembering how to draw these journals is important because if you have been asked to draw it, then you will have to draw it. Okay. So because of that, I recommend you to take a piece of paper and draw all these journals, purchase journal, sales journal, and all the journals, record them and paste it somewhere you see. Okay. Then we wrote the note and we did a question. Okay. So if, by any chance, if you have missed the class, you can refer to the question. Okay. These two questions are there. We have to do it. Then we turn on to sales journal. Okay. So what is sales journal? This is sort of like opposite of the purchases journal. Now, when we have, let's say, now we buy on credit for the resale. Similarly, businesses have tradable goods, goods that are bought for trading purposes, trading goods that they sell on credit. Okay. So if you are selling trading goods on credit, then you will be recording them in the sales journal. And similar to purchases journal, sales journal also have a source document. We call it sales invoice. In purchase journal, we call it purchase invoice. Okay. And any business, they retain a copy of the sales invoice for their reference purpose. So similar to the things we learned earlier, when a business is doing a sale, they may also include trade discounts. Okay, when they're at the point of the sale, they may give a trade discount, and this trade discount is recorded on the invoice, but we are not recording it in our accounts. For example, if there is a trade discount, we are not recording it in our sales journal. Okay, the net value after deducting this trade discount is recorded in the sales journal. And we did a question from that. Okay. So as you can see, we have firstly recorded these transactions in the sales journal. And then after the month end, we have passed this 68,000 to the sales account, income account, credit, debtors credit 68,000. And in individual accounts, person's name, they have this here. Okay. Yeah, that's it.